Markets Update. I'm Mart Sagarishvili, investment consultant at Kamak Retirement Group. Today we're recapping what moved the markets during the last week of October. Stock prices faced renewed selling pressure this past week as concerns about rising coronavirus infections and tougher restrictions stoked fears of another growth downturn. The S&P 500 index suffered its worst weekly decline since March, closing down the week negative 5.6%. America's largest technology companies have thrived throughout the pandemic, delivering strong earnings in the third quarter. Despite better than expected results, the stock price of many technology and internet leaders declined this past week. Investors have become concerned about big tech's lofty valuations and their high concentration in the equity indices. Credit spreads have remained remarkably stable despite the recent equity market sell-off. The correlation between credit spreads and stocks is extremely tight, meaning when stock prices begin to slide, this typically causes corporate bond spreads to widen. The lack of stress in the corporate bond markets right now is notable, as credit spreads typically act as a leading indicator for risk assets. Fear is creeping back into the market as a new wave of infections are spreading across the US and Europe. With many European leaders reimposing new lockdowns, this reignites concerns about the global economic recovery. The VIX index, the most widely watched gauge of investor anxiety, jumped to its highest level since June. U.S. growth surged at the fastest rate on record, rising at a 33.1 annualized rate in the third quarter. While the strong advance was expected after a record plunge in the second quarter, economic activity still remains well below its pre-pandemic levels. With the virus spread still not contained, permanent job losses rising, and government stimulus farther delayed, a full recovery is likely to take a while. Initial jobless claims fell more than expected to 751,000, suggesting the labor market continues to gradually improve. Continuing claims, which report those Americans currently receiving benefits, continue to inch lower to 7.76 million. Oil prices tumbled past week as fears of a new wave of coronavirus soured the market sentiment. This is the lowest price of oil since June. Investors are concerned about the return of lockdowns in Europe that will derail the economic recovery and sap fuel demand again. A bigger than expected jump in crude oil stockpiles also pressured the prices. Election day is right around the corner. This election is shaping up to be the most highly contested race since George Bush defeated Al Gore in 2000. The ongoing challenges on the mail-in ballots suggest that we may not know the real outcome until well after the election day. If by some chance the electoral count is closed, it could come down to a handful of swing states to decide the winner. If this happens, it could surely set the stage for another Supreme Court challenge. Thank you for watching.